Trent Bradshaw with Bradshaw Financial Planning, and thank you for joining us for Mind Your Money. Today is September the 4th, 2020. Wanted to bring you a market update. Touch on the agenda. We're going to talk about earnings. We'll talk about unemployment, followed by the balance sheet, talk about the Federal Reserve and what they're doing there as far as continuing to print money. And then last but not least, let's talk about COVID-19. Let's look at some stats in regards to potential vaccines. Also, look at the hard numbers in regards to where the trend is at this point. Okay, let's jump right in. Let's talk about Q2 2020 earnings growth and also revenue growth for the S&P 500 companies. This is important because this is some of the fundamental data that we focus on and how we make justifications for, again, what we're doing in the portfolio. The news after all the companies have reported is earnings are down negative 37% year over year. Pretty drastic, but obviously COVID-19 and the shutdown had a major impact in that direction of earnings, collapsing so much in the second quarter. In addition to that, revenue growth also went down, negative 9.8%. So what we're looking for is improvement in Q3 and Q4 of 2020. We'll be back with updates in regards to that, but just wanted to give you the hard data surrounding what earnings look like at this point. Secondly, let's jump in and let's talk a little bit about unemployment. The numbers were reported this morning for the month of August. Roughly 1.4 million jobs were added during the month of August, which is a positive, or at least some sunshine in the market at this point. But what you'll see on this chart is that back in April, we lost roughly, over 20 million jobs in 1 month. So what we're doing now is clawing our way back. But if we're adding roughly 1 million jobs a month, it's going to take 1 to 2 years potentially to get those jobs back from what we lost back in April, and for companies to fully recover from the shutdown from COVID-19. But at least this is positive news, and we'll bring you these updates as we move forward. Next one, we want to talk about that Fed balance sheet. Always want to touch on it. Right now, it's roughly $7.2 trillion. We expect it to go to 8 to 9 trillion by the end of the year. But to break this down more, if we wanted to look at the last couple of months, or last few months, we go back to March to where we are right now, and we're looking at the St. Louis Fed chart of the S&P 500, also with the overall increase in the balance sheet, which we just discussed is a little over $7 trillion. But what you'll see is that the Fed really ramped up the liquidity, printed a lot of money there in the first couple months, and of course the market followed. But once we hit the June time frame, about halfway through this chart here, you'll see how that red line levels off. That is a concern because we feel that the majority of the market rally has been driven off the Fed printing money and this excess liquidity. That may or may not be true, but it's just an opinion, but it correlates to exactly what's going on. If we start to see a slowing of the Fed, printing that money and putting it out there on a monthly basis, that could be a negative event for the overall market. Again, we just talked about earnings. What we're looking for fundamentally is to see those earnings improve. We think ultimately, they will, and the market will head in the right direction at some point. If you look at valuations though, the market is very highly valued right now compared to historically. So we got to keep an eye on that. It'd probably be a good point where the market just takes a breather for a while. And that would be great because it'd help the market digest the earnings and what we're going through right now, and of course, what happens in the next couple quarters. All right, let's jump in and take a look at COVID and some positive news there. Two different charts on this page, but on the left side, take a look at phase 1. Right now, we got 23 candidates as far as vaccines in phase 1.
Vaccination.
Vaccination? You mean sticking germs in healthy bodies?
Well, sure, it works.
Phase 2, we got 14. Phase 3, we got 9. And we've got 3 in limited approval right now. That's probably going to be dedicated to the medical community so they can take care of the patients that are suffering from COVID and, of course, protect the staff from potentially acquiring that while they're supplying that treatment to the patients. On the right side, look at the COVID-19 test conducted versus the COVID-19 positive test results. What you'll see here, again, another positive piece of data. If you look at this orange line, you'll see it start to slope down now. So for all the tests that are being ran or given right now, about 5% are coming back positive. So that's definitely come down substantially from the beginning, but testing has ramped up in a big way. So again, positive data there. If we get a vaccine, this is going to come down quickly. It's also going to give visibility to companies so they know what the future looks like and they don't have to worry about potentially a future shutdown or restrictions going forward. Hope you enjoyed the video. If you got any questions, please join us on social media. Don't forget to subscribe to our channel. Give us a call if you got any questions or email. Trent Bradshaw with Bradshaw Financial Planning. Hope you have a wonderful week. Give us a call if we can help.